Bullish cues result in a strong start for the Indian markets. The Nifty trades around the 26,100 mark. The banking index hitting fresh all-time highs. PSU banks and metals, they're leading the way.
A big block deal in Bharti Airtel sees 0.6% equity change worth 7,400 crore rupees. Change of hands at 2,108 rupees per share. Bharti Group is the likely seller of the stake.
Zen Technologies wins close to around 108 crore rupee order for gun simulation systems. The stock surges about 2% but has come off the highs.
And Ask Automotives as well trades higher as promoter sells stakes to SBI Mutual Fund to meet the minimum public shareholding. SBI Mutual Fund also picks up stake in LG Equipments in a block deal. The stock is trading higher by 4%.
Hello and welcome to Chartbusters. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel, and with me today, surprise package. We have Vinny who's joining in on the show. Hey Vinny, good to see you, Vin. And it's been that sort of luck, right? Every time Vinny joins on Chartbusters, the markets do well.
I'm glad. I'm glad it's doing well. 26,000 again, because last few days were not that great, right? 3-4 trading sessions where we ended in the red. So today, at least, we're seeing that green and a strong shade of green coming.
Right.
0.8% of gain. So no complaining on that front. Bank Nifty doing well, IT doing well. So that support is also coming in there, Nigel.
All right. And, we have a couple of managements, Vinny. So let's get straight to the action.
Absolutely. Let's get straight to the action then and bring on the first management for today. We have Amritanshu Khaitan, who's the director of Kilburn Engineering, joining us to discuss three important points that we want to talk about. One, they managed to see very good growth in the first half of the year. Will it continue, this 50% growth, continue for the whole year for FY26? Will they maintain their guidance? What is the revenue contribution that comes in from the acquisitions that they made in the last couple of years? And in terms of the capex as well as the export growth story. This is all that we want to understand, and we have Mr. Khaitan joining in with us this morning. Good morning, Mr. Khaitan. Thank you so much for joining us on the show. And, I want to start by talking about this growth. 50% growth first half of the year. No one's complaining on that front. But second half of the year, will this strong growth continue? And my second part of the question is that even if this growth continues, or even if a bit of a lower growth, by FY28, would it be a fair estimate that you would reach 1,000 crores and above in terms of revenue?
Good morning. So actually, the guidance which we have already given is that this full year we will grow by 50%. That is backed by a strong opening order book of close to 450 crores. And currently, half year ended, we have a order book of 600 crores which needs to be executed. So with this kind of order book visibility available, plus a 4,000 crore order pipeline, inquiry pipeline, we believe a 50% growth for the current year is comfortably achievable. This also takes into account our recent acquisition of Monga Strayfield, a Pune-based drying company, which will add close to 90 to 100 crores top line, which was not there in the year before.
Okay.
So then does that mean that in FY27 and FY28, the newer, obviously, Monga acquisition as well as the ME Energy acquisition that you all made last year, given these acquisitions, seems like they're doing much better. Does that mean FY28, we would see 1,000 crores? Even if I'm counting a 30% growth, you should be able to reach there.
So we believe this year we will grow by 50%. That should get us to a revenue of between 650 to 700 crores. In the coming 2 years, post that, we have guided for a 25% growth. Again, the confidence is there due to the order pipeline, the inquiry pipeline, which is there in the company. ME Energy is a company which we acquired a year back. It has already been successfully integrated. We have bagged 2 very large orders in the ferrous alloy segment, close to 100 crores, for a company whose revenue is 100 crores. And that has opened up a large opportunity. So we believe the growth in the coming 2 years will be strongly aided by the subsidiaries as well.
Hi, Amritanshu. A while since we spoke, and, Your company, in fact, seems to be on a decent footing because we talk about mid-cap pain, and your stock is at a 52-week high. So you seem to be, have guided the street, and the street seems to be optimistic on the prospects. So, going mathematically, 650 crores this year, 25% in the next 2 years. FY28 is that 1,000 crores that Vinny is asking you about, right? So revenue should be 1,000 crores by FY28 mathematically.
So we are aiming to reach 1,000 crores. Whether we reach it in FY27 or 28 will depend if there's any further inorganic opportunities which we are able to cater to.
Okay, all right. So inorganic growth. So you're on the prowl yet again. If you could help us out with, there are some warrants that you issued a few years ago, and that conversion is due. Balance sheet is in fairly okay shape as well. So given that you'll be flush with cash, how will you use this, towards inorganic growth and towards capex?
So we are looking at capex of between 25 to 35 crores, which is not very large. That will basically happen through internal accruals, or we use part of the warrant conversion. This will actually give an asset turn of close to 4 to 5 times, as it's a brownfield capex, where we are actually expanding our current facility both at Kilburn Engineering and at ME Energy. So this capex should generate 150 to 200 crore capacity for the company. Regarding inorganic opportunities, as we have done the fundraise last year, and we have inflow of about 150 crores, which will come in by by May actually, our balance sheet will be fairly strong to look at further opportunities. At the moment, we have not got anything on our table, but we will keep exploring to see if we can continue our roll-up strategy, which we've done over the last 2 acquisitions.
Tanshu, you seem to be having a vision for the company, but normally the promoter entity will like to have the largest chunk, right, in the company. Now, because of this warrant conversion, there has been some dilution at the promoter end. If we look at it, March 2023, promoter held close to 57% in the company. Now, that's diluted to around 46%, and that could get diluted further. At what level are you satisfied with regard to promoter holding in the company? In September, I see you have done a couple of lack of creeping, but yet at 46%, is there more downside? Where does it stabilize at, promoter holding in the company?
So promoter holding is something which we would be comfortable at current levels. As and when we are able to do any creeping acquisition, we would look at doing that. But we have our own warrants which will also get converted in this current dilution which is happening. So we are fairly comfortable at current levels. And then depending on the growth the company has and how we progress over the next 2 years, we will definitely take a call. Regarding the 55% or 45, we look at the total pie, and I think Kilburn has done well for us from that point of view, if you see the way the earnings of the company have gone up.
Okay, just a quick one. In terms of trade receivables, they have seen a very sharp increase versus FY24 and FY25, and operating cash flow, that is negative when I'm looking at it first half of the year FY26 and first half of the year FY25. What is the normal receivable cycle, if you could help us with that? And how do you plan to improve your cash flow conversion? Also, your export opportunities. You've spoken about, contribution of exports coming in at 30 to 40%. By when would we see that also?
So if you see our style of business, the business we operate in, it's a little bit of a long lead cycle. Typically, the orders get executed over 12 months, between 9 months to 15 months. So it is not correct to actually look at 30th September or 31st March as the date to look at the cash flow cycle. We are very comfortable at a 100-day kind of a working capital cycle. If you look at this current quarter, when you saw negative cash flow, it is purely because we had a very large order from Morocco, which got dispatched, but we have not received the money against the dispatch. So that money will come in the third quarter and in the fourth quarter. So from a cash flow angle, the way I personally look at it is I look at my borrowing. If you see, our interest cost has remained flat while our turnover has gone up 3x. So that tells you that there's enough internal accruals happening. It's a question of, on which date the money comes in. So we are fairly comfortable at the current levels. Around 100 days is the working capital cycle. which is very normal to the industry we operate in.
Any big order you're, like how the Moroccan order, which got the street excited, are you bidding for any big international order?
So out of a 4,000 crore order pipeline, I would assume about 10 to 12 inquiries are of similar or larger size.
Okay, Mr. Khaitan, thank you so much for joining us this morning on the show and speaking with us about the company's outlook and waiting to see when the 1,000 crore actually comes in for the revenue, FY27, FY28. We'll speak more with you more often as well. As of now, stock holding on to gain of 1.2%. On that note, we're going to slip into a very short break. Don't go anywhere. After the break, we have the management of HEG joining us to discuss their business outlook. Stay tuned in.
Welcome back. As promised, we have Mr. Riju Junjunwala, who's the Vice Chairman at HEG, who joins us on the show. Hi, Riju. Good to see you. And just to tell our viewers, three big talking points. The promoter bought some stake. Will they buy more? The outlook on the core business, which is the graphite electrode business. And the outlook on the demerger and what kind of value unlocking can take place at 10,000 crore market capitalization. Riju, let's get to the first couple of points then. Promoter, you've gone ahead and bought close to 0.3% from the open market. What is the intention? Do you all want to buy more stake? Do you all believe the company is undervalued? Point number one. And tie it in with the core business. You've been doing an EBITDA of roughly around 150 crores on a quarterly run rate. For this year, what will the graphite electrode business EBITDA look like, 26 and 27?
So thanks, Nigel. I think on your first question, of course, the promoters have bought the stake from the market because we see a very good long-term and a short-term value in the company, both from the HEG graphite point of view and the demerger that you spoke about. On the graphite electrode space, I think we've spoken before also that markets today look a bit weakish, but this is at the lowest ebb, and with the EF furnaces, etc., coming up, this is only a matter of time before the electrode market also becomes much better. And even in the worst of the times, because of us being the lowest cost manufacturer and the single largest one location facility, we've been managed to clock healthy EBITDAs. And this year also our operating EBITDA should be in the tune of between 450 and 500 crores. And then on top of that, you'll have whatever other income, etc. And going forward next year, definitely this will be maintained. And it's only a question of time before, we see kind of a demand supply mismatch coming up, of which the company will stand to gain.
So 450, 500 crores, and next year it should be around 600, 650 crores?
It should be. It's in all probabilities because we've expanded to now 100,000 tons. And last year we've operated at around 80% capacity utilization. Okay. So as capacity utilization and prices both go up in the short run, I think this on a steady state, the EBITDA can be much larger than the number we spoke about.
All right, let's focus on the other part of the business, the green tech business. You have been talking about anodes, there's a power business in there, there's an EPC business in there as well. So I want two numbers from you. What is the peak net debt level number in this particular asset? Because as of now, there's no much revenues out there. So help us understand peak debt number and what will the EBITDA number look like? Say once all this capex that you're doing comes on board.
So just to give you one flavor, this demerger is now in this process of getting approval from SEBI, which is due in another 15-20 days, after which it will go to the NCLT for the official demerger process. After that, the demerger, the HEG Graphite will be one separate listed company, and HEG Greentech, as we propose the name, will be the second company. In HEG Greentech, we already have investors who have come in at a value of around 4,000 crores today. And this was before we had a total control on our existing this hydro business. So you'll be pleased to know that we've completed our acquisition of 49% buyback from the Norwegian company. So the 300 megawatt of hydro that the company runs, we bought it at less than 4 times EV to EBITDA, which is much less than the going market rate. and you can see very healthy returns coming out of that. The EBITDA from that project itself will be in the tune of between 350 to 400 crores, depending on the average selling price of electricity. The second bigger project that we are going in for that, which will be the first of its kind in India, is the anode project, which is a 20,000 ton anode manufacturing plant in Madhya Pradesh. The overall capex over there is to the tune of 2,200 crores, and sampling, etc., is already on with all the major cell players in India and abroad, including bigger cell companies and the cell companies that are coming up in
Yes.
India.
Okay.
So that project will be operational by March of 2027. Then
Okay.
you have this the existing cash flow of the hydro business
Right.
and our battery company RE Plus, which is now seeing a lot of
Right.
traction.
So,
Already-
Riju, just a little short on time. So I think we have got 350 crores from the power business, 350, 400 crores. The anode business will give how much once it's operational, EBITDA?
At a full scale EBITDA, at 20,000 tons, it will be more than around 450 to 500.
450 to 500. So this entire piece, the green tech piece, say by FY28, what kind of a EBITDA number can it do? And the net debt is important.
It could be a 4-digit number, definitely.
1,000 crores of EBITDA from the green tech business. Okay.
But more than that, because we're also looking at a very steady IPP business that we are building within the green tech platform. So a lot of things happening because of which, the promoters took this call of actually increasing the stake. But
Right.
I think a lot of value unlocking should happen once this thing have
Mr. Junjunwala, what would be the debt level, net debt level for HEG Green Tech then? If you could give
the
us
overall equity in HEG Green Tech would be around 2,200 crores. And at peak debt levels, which includes the IPP business, etc., where the leverage is slightly higher, the absolute debt would be around 4,000 to 4,500 crores.
Okay. And just a word, obviously you said approvals are coming in for the demerger and all. Previously your guideline to complete that was calendar year 2025. Would that be by December or should we expect March 2026?
So we are expecting by around middle of December the SEBI approval to come, after which we will file with the NCLT, and that should take a process of around 3 to 4 months.
Okay.
So we are looking at between middle and middle of next calendar year for this company to be listed, and with a very healthy, we are actually looking at both these companies in a different way of adding value to each other, which is not the case today, which we see reflected in the value of the company.
So Riju, by mid-2026, we'll have two listed entities. One will be HEG, which is the core business, which will have ballpark 600 crores of EBITDA. And in the next 2 years, the green tech business, you're talking about more than 1,000 crores of EBITDA potential.
400 of which is already operational, 400 which will already be there on year 1, and in year 2 we'll start scaling up and we'll achieve these numbers in year 2 or 3.
So combined entity, roughly around 1,700 crores of EBITDA, 1,800 crores of EBITDA, with an EV value of close to around 14,000 to 14,500 crores. Fair numbers?
Correct. Where Graphite will be a debt-free company.
Yeah.
And Green Tech will have the loans for the new IPP business and the new projects that we are putting up.
Okay, all right. Thanks a lot, Riju, for joining in. It seems the street likes what you had to say. The stock, I think, has perked up a little bit. We'll track you to all these numbers. That 1,000 crores of EBITDA is, quite interesting because that'll be bigger than what the current core business is doing. So we'll track you on that particular number. Thanks a lot for joining in. Well, time to slip into a short break. As we do that, a quick programming note. If you're looking for big bets and market themes for 2026, CNBC-TV18 Access gives you direct access to White Oak Capital's AMC, Ashish Sumaya and Prashant Khemka, as they share their winning market themes and actionable investment strategies. Ask your questions on the 28th of November at 1:30 p.m. Become a member today on CNBC-TV18 app or log on to cnbctv18.com. Access/plans.
Welcome back to Chartbusters on CNBC-TV18. As of now, when we started the show, the Nifty was below 26,100 and now it's about 26,100, day's highest point, 0.9% of gain, 200 points uptick for the Nifty. Broader end of the market is doing much better as well, holding on to gains of more than 1%, and Nifty Bank too supporting those gains. But with that, we're absolutely out of time on this edition of Chartbusters. Thank you so much for tuning in. Up next, Trading Hour.